there to keep equities moving higher until the year end?
Yeah, I mean, it's difficult to say into the year end. I mean, still we're sort of pretty positive on equity markets for next year. For European equities in particular, there's two sort of, big things that I think are sort of acting as a bit of a headwind at the moment. One, earnings season was pretty uninspiring and didn't give analysts the juice to upgrade their forecast for this year. And the second thing is that actually the economic data recently has been fine in Europe, but no more than that. And so really we've seen a couple of sell-side analysts downgrade their economic forecasts, GDP forecast for 2014. So both of these things are headwinds. And alongside that, I haven't read a note from the sell-side recently that hasn't singled out European equities for next year. So, expectations are pretty high, and, you can see, European equities finding it a little bit harder in the near term, just because it doesn't feel like earnings forecasts are going to go anywhere just yet.
I'm right in saying you guys have turned more tactically cautious, but that hasn't changed your long-term outlook. Is that right?
Yeah, that's exactly right. I think that we just felt that markets are sort of just too visibly focusing on what the central bankers are doing and not focusing enough on the underlying fundamentals. And for us, the underlying fundamentals are pretty good. In the US, we had retail sales the other day, which shows that the US consumer, the keystone of the US and global economy, is still in pretty good shape. And we see earnings growth as sufficient next year to justify better returns from equity markets.
I mean, you mentioned the US, the retail sales. We had US pending home sales yesterday, which were weak. How much does that impact your outlook for the US?
Yeah, it doesn't worry me too much, or doesn't worry us too much, I have to say. It was a decline of 0.5%, and you had a revised September figure of a sort of decline of -5%. So it actually looks like the trajectory is improving. So we'd see that the impact from higher mortgage rates seems to be diminishing rather than accelerating, and that's probably a positive. But generally, it still feels like there's plenty to go for in the housing market in the US.
A question on the UK. The CBI survey yesterday showed UK services hiring at the fastest pace in 6 years. Carney, of course, gives his testimony on the inflation report today. I mean, the pressure's on him, isn't it?
Does feel like that, doesn't it? I mean, he came in, and there was a huge amount of press coverage for him, including what he wears and everything, and there seems to be a lot of praise for him. And he came out with this forward guidance, but the markets immediately decided to disagree with him. And then since then, the markets have actually proved right. And I think the lesson from all of this is that central bank forecasters, they don't know anything that we don't know necessarily. Their forecasters are no better than our forecasters. So it's important to sort of hold a healthy degree of skepticism to what the central bankers forecast in terms of their rates outlook. Markets are perfectly capable of making their own mind up.